Hello everyone. Today's video, trend strength using a clock. Yes, I'm going to show you how to determine the strength of any trend by using a clock. Now, trading shouldn't have to be difficult. Sometimes the most difficult things in trading can be simplified that even children can understand. Did you know you can easily find the strength of any trend by reading the time on a clock? Well, this is really important if you're a trend trader. When looking at price on a chart, do you know the strength of your trend? You want to take trades only in strong trends, not weak ones. And I'm really surprised at how many traders just don't get this, okay? It's really important lesson. You only want to take trades in strong trends, not weak ones, if you're a trend trader. And I've got a super simple trading idea for you. All you have to do is read the clock correctly. Okay, guys, now this is me, Martin, right over here. Welcome back to another weekly video. I'm glad you clicked on and want to watch this video. It's a great one today. Simple lesson though, how to instantly see the trend strength. Okay, and guys, I'm a proud Canadian trader. You can see that right here, and I welcome all new subscribers. My YouTube channel is growing, and I'm getting a lot more subscribers, so thank you very much for everyone from around the world, and especially my Toronto students right here in Canada, Toronto, Canada. If you want to reach me or you've got a specific question, you can reach me here at mskyj007@gmail.com. Okay, so we're going to look at how to use a clock for trend strength analysis. To help you measure the strength of the trend, you can look at the clock to see where the minute hand is. So that's important. Just look at where the minute hand is pointing to. Knowing this will help you see the degree or angle of price movement on a chart. It's the angle of price movement that determines the strength of your trend. So comparing the chart to where the minute hand is on a clock will instantly help you see the trend strength. Okay, so let's take a look at a clock right now. Okay. Now, gonna put on a minute hand in just a moment here, but there are two things to consider. When you look at the minute hand, okay, does it point up or down? First of all, if it's pointing up, you're in an uptrend simply, and if it's pointing down, you're in a downtrend. So the next thing is exactly where does the minute hand point to? That's important if you're a trend trader. Okay, so first of all, here is the minute hand pointing to 3. So anything above the 3 is an uptrend. Anything below the 3 is a downtrend, right? Sounds pretty simple, but guys, I'm not too sure how many traders really truly understand this. So next, does it point up and down? We did that. Exactly where does the minute hand point to? Okay, if the minute hand is pointing up to here, anywhere between the 12 and 2 position, we are in a strong uptrend, okay? And if the minute hand is pointing anywhere below the 4 to the 6th position on the clock, right, we are in a strong downtrend. So that's pretty simple. So we're looking at two things. Exactly where the minute hand is pointing to tells us if we are in a strong trend or not. And the second thing is, are we in an uptrend or a downtrend? Depending on the minute hand, is it above the 3 or is it below the 3, right? Okay, now we want to take a look at a chart and see how that relates to the clock. Okay, so when you're looking at a chart and you're looking at the trend, and there's only 3 possible price moves. So price can either just go up, down, or sideways, right? Now I'm going to take my drawing tool. You can see price is going like this, going like this, going like that, okay? Like that, and then like that, and like that. Okay, so we said 3 possible price moves. Here, we are sideways, okay? We are sideways. Why? Because the clock, the minute hand on the clock is pointed to 3, or just above the 3, or just below the 3, without much deviation right there, and that equates to how price is moving on a moving average. Let's say if this was a moving average, okay, I'm going to show you in just a second a chart with a moving average. So you can see sideways here, up. Okay, here we have up, and again, look at the angle and steepness of that of this trend here. So that's equating to here. And remember, I said if it's between the 12 and 2, we are in a strong uptrend. Okay, and here, what about right here, guys? Okay, so this is pointing this way, right? Okay, again, just imagine in your mind a clock, or yeah, actually take a look at the clock, see where the minute hand is, you know, but again, it's really imaginary. You just have to learn this, but it's super simple, guys. If it's minute hands between the 4 or the 6 right here, we're in a steep decline right here, okay, and it's called a strong downtrend. Okay, it can't be simpler than that. Okay, now moving on again, let's take a look. We're looking at an uptrend on a clock. Okay, again, imagining the minute hand here, and again, I just want to review really quickly. So if the minute hand is between the 12 and the 2, okay, right here between the 12 and the 2, anywhere between the 12 and 2 position on the clock, we are in a strong uptrend. Okay, now a weak uptrend is when, right here, the minute hand position is pointing to between the 2 and 3 position on the clock. That's very weak. Okay, so when you look at a chart, you want to imagine the minute hand on the clock, and your price is moving between 2 and 3, between the 12 and 2 position. That would be a very strong uptrend. Here, a very weak uptrend between the 2 and 3 o'clock position. Okay, so that's the lesson between strong and weak. Let me just take that off, and now we move to a downtrend. So similarly, okay, if the minute hand on the clock is between the 4 and 6, okay, right over here, and can be anywhere between the 4 and 6, we are in a strong downtrend. And again, if the minute hand on the clock is between the 3 and 4 position, we are in a weak downtrend. Okay, again, downtrend because we're under 3. Okay, under 3. So between 3 and 4 here is weak. And again, look at the angle. Look at the angle. It's a very shallow angle. There isn't much of an angle. But from here, look at the angle. From 3 to here, wherever the minute hand is pointing, that's a very large angle, very large angle. So the greater the angle, okay, shows you also the greater the strength of the price movement. So again, guys, this is super easy, and I am really surprised that a lot of traders don't get this. They're placing trades in very weak zones on a chart, you know, when the trend is very weak, instead of the strong. And always remember that. Always look for the strong trends. Okay, so back to the chart. We're going to be applying a moving average. Now, this is one of the simplest things you can do, guys. If you're on MetaTrader 4, apply a simple moving average to a chart. And as you know, if you've been following my videos, I trade the daily charts. So I put on here a moving average. It can be anything you want. You can play around with it, whichever one you're comfortable with. But you can use a 21 moving average, or you can use a 30 simple moving average, or a 50 moving average. It doesn't really matter. But again, you'll see that, and this is just a bit of a mini lesson here. Once price breaks the previous high, right there, price breaks the previous high, we are in an uptrend. And take a look at the angle of this moving average, guys. You can see that we are in a strong uptrend. So it's somewhere here you want to place a trade, and the best place is when price breaks up through previous high, wait for a pullback, and get in early in the trend. Okay, so in a strong uptrend, you want to see the moving average, and we look at moving average. We don't look at price. We look at where the moving average is, if we can see that in our mind on a second-hand clock, the second hand on a clock, and we want to see it between the 12 and 2 o'clock position. Right here. So we want to see the moving average, this moving average, somewhere between 12 and 2, which tells us we're in a strong uptrend. Now, on a downtrend, we want to see the moving average right here. This is the moving average between the 4 and 6 o'clock position, which will determine that the trend is in a strong downtrend. So that is pretty simple, isn't it? Okay. And by the way, this is really good for trade entry since one or the other, the bulls or bears, have now established control. So we want to take a trade with either the bulls or the bears who have established control and then ride the trend. Okay. Now, the next thing we want to do is take a look at this right over here. Moving average tells all. Now, this is interesting. We've talked about the strong and weak up or down trend, but again, here's another slide showing the weak trends. Okay, and let me just draw that. So here you can see here and here, these are very weak trends. Okay, and the moving average, when you can see the moving average on a chart, that equates to the second hand on a clock between a 3 and 4 o'clock position for a downtrend, right? You can see between 3 and 4, and for an uptrend between 2 and 3. So again, if you see the moving average pointing to between the 2 and 3 o'clock position on the clock, then you know you have a weak trend. Now, you should stay out of these areas. Okay, stay out. They're not that good for trade entries since neither the bulls or bears are in control. Okay, so no one's in control of the markets. So you want to stay out of the markets until you can establish who is in control. Okay, another slide here. I'm cheating a bit because I really should go to the next slide. Actually, let me do that. Okay, the best simple strategy, we're going to go back to that previous slide in just a second. The best simple strategy is really to apply not one moving average, but 3 moving averages. So we're going to put on a chart, again, a fast moving average, which illustrates the short-term movement. The medium moving average, okay, in the green here, and the red shows you a slow moving average. So again, as an example, if you're trading on the daily chart, this might be the 21 moving average, this might be the 50 moving average, and maybe 100 moving average, right? But you can see what's happening. The blue is below the green, below the red. So the very fast moving average in a downtrend is below the medium moving average, and these two are below the red moving average, which is the slowest, right? And once you see the moving averages in order from the fastest to the slowest in a downtrend, that also shows you the actual strength of the trend. In this case, it's very strong to the downside, and price also has to be below the blue line. Okay, so this is a very simple strategy for getting in a trade entry. Price breaks the previous low, and you could get in early in the trend and then write it down. Okay, now again, super simple and easy to understand. And the next thing here is for a reversal. If you're looking for a reversal when price reverses going higher from after coming back down, we have a sideways consolidation right here. Okay, this is all sideways consolidation, and you can see the trend is sideways, right? Because basically the moving average, let me just take that all off the chart there. All the moving averages are together. You can see they're pointing straight toward the number 3 on a clock. Okay, and when you see that, we're in a period of a ranging market or a sideways market, and nobody is in control, so you want to stay out of a trade. You don't want to trade then. However, as soon as you break a previous high, here's a previous high right here. You can wait for a retracement, a pullback, and then get in right away and ride the trend higher. And you can see the moving averages have now again aligned in the correct order. The blue in an uptrend, the blue has to be above the green, above the red. So this is the fastest moving average, the midterm moving average, the slowest moving averages. They are in order, and this is really important for you to see the overall strength. Okay, now we're going to move on, and I want to use the clock for looking at the angles, and this is important. It's something I didn't really talk about. I did a bit, but let's continue with that. The angle of the fast and midterm moving averages, okay, on the clock reveal overall strength, either strong or weak or none. Okay, I'll explain that in just a second. The slow moving average confirms the overall direction and longer term momentum. The angle of this slow moving average can be less than the faster moving averages, but the other faster moving averages have to be above the slow for a good bullish entry and must be below the slow moving average for a good bearish entry. So again, take a look here. These two, the faster two moving averages right here, the blue and the green, they have to, well, first of all, they tell you the overall strength. And if they're between in the downtrend here, between the 6 and 4 o'clock position, the strength of the trend is very strong, right? The red slow moving average doesn't have to have the same angle as the green and blue moving average, but these two have to be below the red for it to be in a downtrend. Here, the two fastest moving averages have to be above the red for it to be in a strong uptrend. Now, the next thing we want to look at is the angles in between the moving averages. You can see here the angles are getting wider. The downtrend is becoming stronger. Okay, the angle here between the moving averages, you can see getting wider. Again, the uptrend is getting stronger. So looking at the angles between the moving averages certainly will help you instantly see the strength of the trend, and that as well as the exact position on a clock. If you can just imagine the minute hand on a clock where it is, in this case in the uptrend, the moving averages are the first two. We're not concerned with the third one. We're not concerned with the slowest one, the red one in this case. But in an uptrend, we're concerned with the first two, and they should be between the 12 and 2 o'clock position. In a downtrend, these two moving averages, the fastest two, should be between the 4 and 6 o'clock position. So hopefully that's pretty easy to understand. I'm sure it is, guys. Just look at a chart and imagine what you see on a clock, okay? And finally, the information in this video will give you a good start, but you should not trade the entries based solely on the simple moving average crosses. So right here, you can see price crossed, the moving averages crossed here and got into the same in the proper alignment, with the fastest being below the midterm, below the slowest. And here everything crossed right here, with the fastest, the blue above the green, the midterm above the red, which is slow. So don't take entries just based on the moving average crosses in this best simple strategy, and just wait for retracements, okay? So in this case, up and then retrace and then go. In this case, down, retrace, and go, okay? So you need a couple other things. To apply this simple strategy, you will need at least a good momentum indicator. One could be the MACD, to help confirm that price will keep moving in the direction of a trend. And always, guys, always remember to apply good, sensible money management system to your overall trading strategy. Okay, that's super important. Now, finally, a summary of what you've learned. Okay, you can easily establish a really good trading strategy with this trend strength knowledge. So the first thing, if you want to get into trading, always understand the strength of your trend. This video, you've learned how to see trend direction, gauge the overall strength of price movement, see price reversals, and look for bullish or bearish entries with more confidence. So hopefully you gained a lot out of this video. I thank you very much for subscribing to my channel. If you loved the video and want to see more videos like this, don't forget to click on the like button, okay, the like and the subscribe links below the video. You also need to click on the tiny bell to get my videos. So take care, guys. I enjoyed talking to you, and I will look forward to you next week. All the best, happy trading, and take care. Bye for now.